Good morning, traders from around the world. TGIF. I hope you're all well rested for your next biggest ever trading day in your life before the next one.
Good morning.
I like
the
How
background. I like the photo, man. That's funny.
That's what the market is like now, right?
Yeah, it seems that everybody, there's lots of hope about a turn for the worst in data, which means a turn for the best or for the better in equities.
Yeah, exactly. And well, I mean, after yesterday's Fed speakers, we may hope, but not sure we're going to get it yet. But we'll come to that a little bit later. First of all, I have to tell the people here we're having a special guest today, our headmaster surfer of the Elliott waves, who Gregor will be joining us in a little while. So stick around.
Yay!
Be very, very interesting. Right.
I'm going to promote him now, and he can speak afterwards. Okay, perfect.
Yeah, okay. And don't forget our Trader Summit event coming up in exactly 2 weeks now. And
yes,
it's going to be something very, very special. The last one was already great. This one is even going to be greater. Lots of very, very interesting speakers, a couple of lively debates coming up, I'm sure. Looking at the lineup, really make sure you register for the event. It's going to be something. Here, this one, for instance, is not to be missed. All right, then let's move over to where is my economic data screen?
Hey, Bran. Hey, Paul, Richard, Taki. The photo indicates our age. You're the same age as us, mate. So what are you talking about? Hey, Gavin. I've actually met Taki a few times. Very nice guy. Very nice guy.
Okay. Can you
Laura,
see my data screen?
Yes, we can see it.
Calendar. Okay, good. All right, then quickly moving over to what we had as data. The Japanese household spending year on year, okay, a little bit higher than before, but the month on month is dropping once more. And what is troubling me, looking at the inflation in Japan, is that wages are still not catching up and far from where they should be. The government and even Bank of Japan, they always try to lobby for increases of about 3%, but it's very, very rare that people in Japan are getting it. So as long as this is not really picking up, I have my doubts that the Bank of Japan is going to change much to their monetary policy. What else we had? We had some reserves coming out. The Japanese forex reserves, 50 billion lower than prior. And Finance Minister Suzuki was on the wire saying that interventions were part of this decline in FX reserves. But as we can see, they still got plenty. And I forgot the name of the other speaker in Japan who said that they have many ways and to intervene and enough liquidity and they have different ways as well. As we know, they can do swaps and stuff. For the rest, the actual indicators in Japan lately have been improving somewhat. So on that front, it's not all that bad in Japan lately, and providing we get a better opening of the economies, those things should gradually improve. Even though Bank of Japan is not going to do much, but we may build up slowly to perhaps some minor changes. Swiss employment rate still good. The housing prices in the UK slipping a bit, but nothing really to write home about. Germany, the retail sales are down again and revised a little bit worse than last month. The August data in Germany have not been really good. We have to acknowledge that. We've seen it in the PMIs. We've seen it in retail sales now. The data in Germany are not very good, and we shouldn't lose track of that. For the rest, manufacturing production in Norway a bit lower. I'll quickly talk about the Norwegian kroner later. Because I think we're seeing some interesting moves and levels that holding. For the rest, French trade balance negative, current account negative, and as viewers know, that is something that I'm watching. Current account is a driver of mechanical driver of currencies, and then the rest, yeah, minor moves on those numbers. Yeah, equity withdrawal in the UK quarter on quarter, minus 5 billion. Labor productivity still holding up. I must say that the actual data in the UK, some of it's really a mixed bag. Some of it is coming out weak, but others, as we've also seen on the PMIs, they are holding up pretty okay. What is hurting sterling right now is doubts about fiscal plans in the UK, doubts about what they are going to put against the spending again, and the market is really doubting that the woes in the UK pension market are over. We've seen some articles come out and people warning about what could happen next week when the Bank of Japan steps out of the market. And then for the rest, that's about it. There were a few comments out overnight. IMF again coming out with a darker outlook and heightening the recession risks. Also, as I said, an article about the UK businesses. They are having the worst outlook in 2 years. Right now,
sorry,
that overhangs the sterling as well, blocking every sizable recovery. Even though we've seen pretty fierce moves. And then last thing, but not least, we've had a plethora of Fed speakers yesterday and overnight, and it sounds to me that they want to look through a possible weaker jobs report, because as well Mester as Evans, and then especially Kashkari and Waller were very vocal about them needing to continue, needing to also not pay too much attention as well to what's happening in the rest of the world, because they are saying, especially Waller was saying, well, we are handling our problems, let the other ones handle their problems. And that contributed to the dollar going into this afternoon's data at pretty high levels, albeit cable, of course, being so volatile. But euro dollar shied away from parity. Cable got a hit from the 115, and as we can see, the commodity currencies are also on the weak side, and dollar yen is trading very close to its highs. Stelios, have you seen anything else before we start to talk about the NFP?
You covered pretty much everything. I was actually doing other stuff while you were speaking. Did you mention what caught my eye most was Kashkari, who said that yeah, there's going to be trouble and quite a few failures, company failures from tightening and this monetary policy, but we're going to have to deal with it or something like that. So Kashkari has gone from being the ultra dove, when really he should have been advocating for hikes, to now being the ultra hawk, who really maybe should be going the other way. So he seems to be the guy who's completely wrong all of the time. But anyway, just something that I never expected him to be this hawkish. I mean, he's practically the most hawkish Fed member at the moment, which is crazy. I never thought I'd be saying it about him. But anyway, yeah. I agree with you. I think the Fed, they're continuing to tell us that they are staying the course, and that any collateral damage that happens due to the tightening, well, so be it. We have to live with it. The question is, it's very all nice and good to say it. What happens when the poop starts hitting the fan properly? I'm betting they're going to be singing another tune. But at the moment, the Fed is still hawkish. Nothing has changed. I know I repeat myself all the time. I think the time for them to switch is coming. It's closer than people think, but it's not yet. So for me, I wouldn't even try to pick a low or buy the dip or whatever until they tell us to.
Yeah, exactly. And also what sticks out of all those comments is that they all are very vocal in repeating that the pivot is not there yet. It's not yesterday, but Waller is a hawk, of course, but he says that what was his line again? He was asked about a pivot, and he says, let me be clear, this is not something I'm considering or believe to be a very likely development right now. So, and we all know that they can switch, but yeah, I mean, they're telling us that. Well, we haven't heard from the big man, of course, Powell, but all of them are saying that they are not ready for the pivot yet. So that puts me in the camp where we would have a slightly underwhelming report. The market may be quickly to recall what the Fed speakers are saying, and we could see some dollar buyers on dips. But of course, as I was saying in the room, now the only thing to decide or to define is what is a dip. Is it 50 points or is it 250 points in this market? But let's have a quick look at what our partners of ForexAnalytix put together. They are a very, very nice table of what the bank expectations are. And with the permissions of our friends at LiveSquawk, I can show this this morning. So these are the expectations for the NFP, for the unemployment rate, and the average hourly earnings. And the funny thing to me is that the whole market is hoping or really thinking that we may see a pivot soon. But then if you look at the numbers, there's not one single number, not one single expectation below 200K. And
yeah, that's really weird. And I actually think if it's a two handle, if it starts with 200 or above, the market's going to actually
ramp.
No, I don't think they're going to like it too much. I think 220, 230, 240, 250 or above, I think the market's dropping.
Yeah,
because it may be expecting a bigger drop in the number, which may or may not come.
Yeah, and as I've been saying a couple of times, but those are like already pretty old rules. I am an old trader after all. We were in the good days, the good old days, as we say, we were looking at 200K as being a kind of level for real job creation, above or below. So above creating of jobs, below there are jobs disappearing. So as you say, 200, 250, that's where we're looking at. If it's above, in my opinion, dollar will ramp again because the market will recall what the Fed speakers are saying. And then this is one as well. I mean, if we think that the Fed is okay to let unemployment rate go above 4%, looking at these expectations, I mean, apart from two, there's BNP Paribas and Standard Chartered. There's not one who thinks that the unemployment rate is going to rise above last month, because last month came out at 3.7, and they're still expecting 3.7, 3.6. Of course, we have to look at the participation rate, but participation rate will come like behind in importance those two numbers. And also, nobody sees any dramas on the hourly earnings, even looking a little bit better than on average. That is, on average, looking a little bit better than last month. So clearly, well, not we, but the global market is wanting, really hoping for, because that would be probably the easier trade. They're hoping for pivots, but in the expectations, banks are not showing it. So that's I think the theme of the morning, going into those expectations, going into this labor report, and we've been talking about it, and we all agree that whatever the number is, even if it comes out in line, which would be seen as relatively good, we all think that there is the market is going to move, because we have seen ahead of those data, we have seen pretty violent moves. Think about cable. We have done like 10 big figures in a week's time. It's a lot, right? It's a lot. Even on the euro dollar, we've got like what is it, 450 pips range for the week. Building into those data, it's a lot. All right. So we have seen commodity currencies dump in a pretty hard fashion as well. Aussie, Kiwi. It doesn't look that much, but in percent wise, it's quite a bit. And if you look at Scandis, same thing. So I think the market is geared up towards quite big swings today. All right. Anything you want to add, Still, to the outlook, to what your thoughts are?
For the payrolls, no, I think we covered it. You know, I think if we see, as I said before, if we see a number of, you know, with a one handle, the market's going to like it in terms of risk getting bid, dollar getting sold. But anything, you know, 220, 230 and above, it's going to be the opposite. And the way the market's trading recently, it feels like a binary event again. You know, it's going to go one way or the other. If you know, if we get a number in line with expectations, I think dollar rallies definitely, and markets sell off. So it's a fine line, and I think either way things are going to move today, because really what we're doing now is we're waiting to see when the Fed's going to pivot, and the Fed are looking at data. So every data print becomes more important.
Yeah. Bran is asking, no saloon doors. I think there could be a few. The saloon doors have been repainted, freshly repainted this morning. So watch out for them. Don't run into them. And before passing on to our special headmaster surfer today, I want to just without giving too much levels away, or without going too much into detail, I want to say, and I'm just I've been thinking a little bit, and what I usually do on those big events, it's not only look at dollar pairs, but also look at a few crosses, and just globally, I would say that a very good print or a good print could see, despite what happens in equity markets. I'm talking about FX here, okay? I mean, the equity markets can see a few saloon doors as well, because if you look about the data itself, of course, if we get a weaker print, but not a disaster print, equities are going to rally, at first at least. If you get a really, really strong print, equities are going to dump, metals are going to dump, initially at least. But let's not forget the underlying, right? If you get a really good print, and yes, the Fed is going to hike, and possibly create some too strict or too tight financial conditions, especially for other countries. But in FX, there is a little bit of risk to trade as well, in my opinion. So I'm going to take the two extremes. I think if it's a very good number, some of the risk pairs can do pretty well. And I'm thinking especially about the Americas, and then I'm thinking about Canada and Mex. And we've seen oil recover quite a bit after the OPEC cut their output by 2 million barrels per day. And a pair like Euro CAD, for instance, or CAD Yen, and then you look at pairs like Euro Mex, or Mex Yen is a bit perhaps too exotic, but the Euro Mex, in which I've been already for quite a while. But I think risk could do quite well, unless you got a bumper in like a 500K and unemployment rate going lower. Perhaps then there's too much of a dollar scare to immediately dive in those crosses. But I think if you got decent report, risk on the FX side could do well. If in turn we get a crap report, like literally going virtually close to zero, and unemployment rate going up closer to the 4%, then things like we could see a very big risk-off move in the FX markets, in my opinion, and then you could see stuff like Euro Aussie, Euro CAD in turn, and then go higher. But then currencies like the Swiss, for instance, or the yen, they could gain some traction. So for stuff non-dollar pairs, I'll also be looking at a few of the crosses. And then before giving the word to Greg quickly, this is the channel that we were looking at in the US 10s. It's been holding, and we are hovering around the top end of this channel, and these are also spike highs. So I think if the report is good, the 4%, which is also a long-term fib as I've been showing in the past, the 4% I think is going to be tested, if not broken. If in turn we are starting to see crap numbers out of there, keep an eye on this here, and this is now exactly where the fib is as well, around 365 in yields. If we start to get back down there, we shouldn't exclude a move back to 350, and those are, as we have already been saying, sizable moves. But the bond market is so nervous right now that don't exclude 20, 30, 40 BPs moves in stuff like the US 10s. And if you look at the twos, we're also nearly back to the highs. If that goes, then I think there's nothing to hold it back from going to have a look at trade at what Evans was telling us, the 4.5, 4.75%. Why not even get closer to 5% if the number is really good? The 4% is the first level to pay attention to. If the numbers would start to turn really south, this 4% could easily give way. On the short end, we've seen those violent moves. This 4% could easily give way, and we could have a crack at the 390, and why not even trade back down to closer to 3.5 there as well. So keep a very, very close eye on what's happening in the yields market, in the bond market, because they are big drivers of what's happening in the FX, right? So just keep it in mind, and keep a very, very close eye on what's happening in the bond market. Quick look at gold. We are back on this trend line here. To me, it's 1730. Call it on the top side, and then this is just going to be firewood if anything comes out. I don't see. We could easily see 1680 if the number really surprises to the top side. And the interesting levels to watch in silver are still the same, 2090 up to 210810, and then on the downside 2020 the figure. And unless you want to look at something specific, still we are perhaps ready to give the word to our headmaster surfer Gregor.
Yeah,
yes,
hey, I'm here.
Hey,
I'm waiting.
Welcome, and thank you for joining the Flow Show and giving us a bit of insight on what you are going to be looking at. We can have a chat about what you're looking at any time. So yep. I'm going to stop sharing and you take over. There we go.
Okay.
Yeah.
So yeah, I mean, I prepared a lot of charts today, so we'll see if I can cover all of them. Actually, as you mentioned yourself, firstly, what I would start with are definitely the 10-year US notes or yields, if you want. I think still that this is a very strong uptrend. We are at very big 4% level. But from an Elliott wave perspective, whenever I want to say that maybe the uptrend is done, I need to see all the subdivisions in place. And if you look closely here on the intraday chart, actually it's the same chart as Kevin showed. we are breaking this out of this downward channel. So it appears that we are headed higher here for a new high, for a retest of the highs. And if the jobs, as you know, will come out strong today, then I think obviously Fed, which is obviously very hawkish, no one cares about jobs, it appears, after recent comments in the last 24 hours. So I think that even if jobs would be slightly below expectations, the Fed would still obviously stay with this hawkish pattern. And I think that there should be no issues to see US yields at some point trading back towards the highs. And with that being said, I think that at the same time, commodity currencies, if we are going to see new highs here, like Aussie, Kiwi will retest the lows. They are actually not far away. And at the same time, watch for dollar yen. Okay, and now looking at the dollar yen here, I still think that this pair has a room to rally potential towards 148. What I'm looking at here is the latest intervention that happened actually was just a temporary spike to the downside. So easing obviously from their side means that speculators will stick towards bullish setups here on dollar yen, and I think that there is room for more gains as long we are trading actually below, sorry, not below, but above this this spike low here, or which was down towards 140. So obviously, if you look at this correlation, yeah.
Yeah, on this dollar yen, can just want to remind people of the Kuroda line and
sure.
the MOF that moves of 200-300 pips in one or two sessions are too much for their liking. So if ever we would see this 148 really on a speculative drive this afternoon, be very, very, very careful, because that would mean 300 points from where we are now. Just wanted to.
Yeah, and actually, why I highlighted 148 as well is because, as I shared already this chart in our chat room plenty of times, that was the same level that goes back to 98. Okay, when this intervention also occurred, and actually it was the massive reversal later on. So I think it's a very, very important level up there, and maybe we are running this into the late stages of this recovery. But in the short term, based on the US yields, which has a room for a new high, and this could obviously be supportive for dollar yen as well. And despite higher US yields, we are also seeing stock markets doing quite well, and this, in my opinion, is quite good for dollar yen. So of course we will see what will be the jobs data. But as I said, if the US yields, if we respect what the US yields are doing right now, then obviously Aussie and Kiwi, in my opinion, could still, as I said earlier, retest the lows. Now, from an Elliott wave perspective, you can clearly see that that was a very sharp drop here at the end of September. Now we are just consolidating. Okay, so even if you're not Elliott wave expert, you probably will define this as just a pause with an ongoing downtrend rather than a bullish reversal. So odds are definitely here in favor of the bears, and I would not be surprised to see these new lows maybe today, maybe early next week. But again, keep in mind on some of the big picture, as Blake already showed you, I believe, several times this chart as well, similar chart in F.A.C.E. Actually, we are looking for a corrective temporary pullback, and this could be a very big, massive head and shoulders bottom formation. At the same time, I'm watching this Hang Seng Index down there as well. We are still very well placed at this trend line. So despite seeing a bearish pattern on the intraday charts, of course, want to see whenever I do any kind of a trade setups, I want to look for potential trade setups in this current direction. I'm still aware of potential massive change in sentiment and trend, let's say in the next few months towards the end of the year or start of the next year. Of course, everything will be linked to the hawkish or a dovish view. Obviously, those are not anywhere near. But if jobs maybe in the upcoming months will be disappointing, then who knows, maybe they will be forced to change the policy, or at least speculators will be the first one to change the trend here. Now let's take a look on Kiwi. Also,
can I ask you a question about the Aussie, Greg?
Yeah,
When you talk about this, you say massive inverse head and shoulder formation. Where does it have to hold?
Well, actually, I currently would look for this trend line support to be the level where I want to see that this right shoulder would definitely stop. But if 60? We go, yeah.
What is that level then? Around 60?
That level is, yes, exactly around there.
Okay, thank you.
So that's, I believe, is also slightly below 61.8% FIP. But if I see 78.6% FIP, then this would not be any ideal head and shoulders bottom formation anymore, because right shoulder would then be much bigger compared to the left shoulder. But still, from Elliott wave terms, I'm looking this to be a wave B, because the previous recovery was very sharp and strong, and I think that this is just a pause, and I believe that we will stay and remain above these lows from 2000. Now let's take a look on Kiwi. As I said, also obviously very similar pattern here as well, looking for a wave 4 perfect stop at the 38.2% of a previous extended wave 3. Been updating this one quite regularly over the last few weeks, and looks like that we are now pending the breakdown here, and watch out then for the final push into these FIP projections here around 0.44. So keep in mind that once these new lows will be reached, it will be late stages of the higher degree pattern. Okay, so keep in mind that after every 5 waves, market could again slow down a bit. So you will not see straight move to the downside, but most likely just then next week or the next 2 weeks, another temporary stabilization here. Now, let's take a look also what I have here. Okay, now let's take a look also on some of the euro and cable charts, and later on I will also cover crude oil and dollar Mexican peso. Now, cable, as you know, has been doing pretty well after Bank of England decided for temporary QE. So we are seeing a massive reversal in a trend, and I've been highlighting this very big trend line, important trend line of this wedge pattern, maybe even better shown here on this monthly chart. We also spiked below 84 levels, and now we are reversing quite nicely. We are actually above, back above this lower trend line. So I think that there is a chance for more upside, but of course for euro and pound to continue much higher, I think that I would look for these two to resume higher, especially if we get disappointing data today from during the November report. So we'll see how this will play out, but definitely when dollar is going to be weak, I would be looking at this stage at the euro and the pound, because I think that they're doing quite well with this recent rebound. Also, I want to look at this ETF for the pound sterling, and notice that there is a very nice clear 5 waves down, and what I really like, or what is significant in my opinion, are massive volumes here within this 5th wave, and normally that occurs at the end of the higher degree trend. So I would not be surprised to see more upside. I think that pound will have hard times actually retesting the lows. Even if we see US yields trading higher, I think that there will be pullbacks on euro and pound that are currently already unfolding a little bit deeper, but doesn't mean that they...
So Gregor, so basically capitulation has probably already happened by the
longs. I mean, based on this
huge volume, yeah.
Yeah, I think that, and whenever, I mean, if you see 5% moves during one session, and then a massive reversal, then clearly this appears to be like a capitulation. I mean, something similar, a very strong drop also occurred here back, obviously in March 2020. So this appears to be like some very similar price action, in my opinion. And we had plenty of similar patterns here. Okay, when we have seen a massive sell-off and sharp drops on pound, and this one easily recovered just a few days later. So I'm not surprised actually to see something similar right now.
Gregor,
yeah,
where's your bottom trend line on the cable there of that wedge? Where is that coming in right now?
You mean this wedge?
Yeah, the wedge, the bottom end. Where is it right now? Where's the price right now?
Currently we are this trend line comes in around to 109.
109. All right. Thank you.
Yeah. Okay. Now let's take a look also really quickly, as I said, on the euro dollar. Okay, so euro dollar obviously in a very similar situation here. I was forced to change the recent wave count. I thought it would go slightly lower, but after this broken trend line, I just have to respect what the market is doing. It looks like the trend is either changing or just stabilizing. So today, again, will be very important to see if these trend lines on the next dip will hold. You have the 61.8% here around 97.40. There was also this some swing support from a week back or so. And if we can rally back above 99.20, then I think that at some point we will attack this 102 level, because then we would see this drop that is currently unfolding, this pullback in 3 waves and completed correction. Now let's take, of course, this could come in play, especially if, as I said earlier, jobs would disappoint. Now let's take a look also on crude oil and dollar Mexican peso. Now, crude oil is in our situation, obviously between Russia and Ukraine, or I should say Europe, is maybe even getting worse this week. And at the same time, we have OPEC who decided actually to cut production by 2 million barrels per day by November, if I'm not wrong. Actually, this will put even more fuel on fire with the European Union, who already is trying to limit the prices here on energy. But it looks like that from an Elliott wave perspective, we still could see more gains. Now, looking here, you have a very nice wedge. I've been tracking this wedge for a while. I also highlighted this when we were trading at this lower trend line, and we successfully turned up and even made a decisive break higher. And this appears like a very impulsive reaction. So in my opinion, this could easily drive prices even possibly towards 97, maybe even 100 level. So I think that for the next 2 weeks or so, crude oil will stay here in this uptrend. And at the same time, I would be looking for Mexican peso maybe to see more strength. Now, keep in mind that Mexican peso is doing quite well despite US dollar trading higher. Okay, so if you look here, I have the overlay chart. You have here let me check. This is dollar NOK. Okay, on the top. Then you have this one is pound, but it's cable actually inverted scale. And then you have here I have Dixie, okay, and here I have Aussie, also inverted scale. And if I add dollar Mexican peso, well, look where is this one. So it means that despite higher and strong US dollar across the board, dollar Mexican peso is still in a sideways move. So imagine what may happen when we are going to see a reversal, potentially a reversal or top formation on this dollar index or other markets. Maybe when Aussie completes this 5-wave drop, what will happen on this one? Well, I think that this one will then break decisively to the downside. And so far, this is also supportive from the crude oil, which is already turning higher. So if you're trading, or at least me, looking at dollar Mexican peso, the only option for me is to look on the short side of dollar Mexican peso. Now, and from an Elliott wave perspective, okay, I also see a very nice pattern here. You have very clean 5 waves down, now consolidation. Okay, so now if you look this chart and open dollar index chart, you will see dollar index up here, but this one is still down here. And if dollar index would turn, obviously, maybe just into temporary pullback, I think that dollar Mexican peso will be much lower. I'm looking for a retracement all the way back towards February 2020 pandemic low to retest, but then potentially even lower. Now, what I'm looking at here is a triangle. It's an ABCDE pattern, and looks like that we can already count 5 subwaves. So watch out for 19.70. If we can break this level, then I think that this impulsive decline could actually start unfolding. Also, maybe we could look for potential head and shoulder stop formation here as well. You have this lower trend line that should be very important one. It's connected from 2017 lows. We are now still not there. We retested it 3 months back, but another attempt and a potential breakdown could actually cause this this massive drop that I'm expecting. Let's say by the end of the year, next year, I think the dollar Mexican peso will be trading lower. Now,
I like it when your Elliott waves and your specialty is in line with what I'm thinking about a currency. Although I'm not in dollar mix, but as people know, I'm more like trading euro mix, because there's also some fundamental reason why the mix is keeping stronger, and that's the proximity to the US, right?
Yeah, they have rates at.
It's what I call the far from my bed safe haven status, because it's got less impact from the Ukraine crisis as well, and let's not forget that Mexico is a bit is partially the manufacturer for the US as well.
And that their interest rates is at
the interest rates.
Yeah, they're very high. So and
there's a lot going for the Mexican peso right now.
Yeah, so I have even Euro Mexican peso account here, as you can see, and looks like that we are in a very strong bearish impulse. And if I give you a little bit of Elliott wave theory here, whenever I connect this trend line from the top, okay, and then from the end of a wave 2, I put the same trend line at the bottom of wave 1, and whenever you see these prices that are declining going out of a downward channel, so they are not in a channel anymore, but they are actually below the lowest trend line, that means that trend is very strong and normally represents an impulsive wave 3 rather than final stages like a wave C of a counter trend movement. So if that's wave 3, then the next bounce again should be corrective, in my opinion, should be wave 4, which could stop at the area of a former wave 4. So even if Euro Mexican peso would rise, maybe this would come from the euro dollar, if we'll be able to maybe to gain back above parity. So still, I think that even if we see some kind of a rally here, which I don't think from where it will come, I would be looking definitely for limited upside. So resistance in such case would be around 20.70, 21, around there.
Okay. Yeah, and on the dollar mix, as you were pointing out, the 1970s is really a big level. If those low 1970s would go, I think it could, as you say, and I've been showing that as well on prior shows, why not go back into the 18s, right, on the dollar mix? And I'm looking at really pretty similar on the euro mix. Really, in the more longer term, it's also going into the 18s, and why not further?
Okay, now finally, I will also look at the S&P 500, because I'm sure that a lot of attendees are interested to see what I have to say about this one. Well, I still think that we are here in incomplete correction. We could be in a wave 5, in a wave C. Wave C again is a motive wave. It should be made by 5 subwaves. Now, based on the latest development, it looks like that we are now in a wave 4. So in ideal impulsive sequence, wave 4 should not trade into the territory of a wave 1. And if I zoom this in a little bit, that's invalidation level around 38.85. Okay, so as long as we are below that level, this could be wave 4. Also, watch out for this VIX fear index. We have seen some fear, but still not that volatile moves. So I think that we should be aware of something more aggressive. Maybe if stocks would come to the downside, I think that we will return back to the upper side of this range when the extreme fear would actually go in line with the potential bottom, because that's how the markets actually works. Also, if we see the 38.850 overlapped, then unfortunately things will get a little bit more tricky. Okay, then I think that this wave B, if I go back, this wave B here, which is shown as finished, then unfortunately this wave B would still be unfolding. Okay, why? Because whenever in Elliott wave theory, whenever we see move into a new high or into a new low in only 3 waves, it means that it's either a completed correction or part of a complex correction. And in our case, it would be part of a complex correction. So in such case, I would not be looking for this wave B to be finished here, because you need 5 subwaves for a wave C to complete the whole structure, but rather would still be, this drop would still be part of a more complex wave B. In such case, what I would be looking, if let's say today we see a break above 38.85, we close there, finish the week there, then I think that in the short term, even if the whole structure is still going to remain in downtrend, the whole structure could point at least temporarily towards this upper resistance area here in the short term for 4,180 to 4,300, because that's the resistance for potential flat, or maybe even if it's going to be a triangle. But as I said, things will get a little bit more complicated, because you would not be in current intraday bearish trend anymore, but more again back into neutral zone. So expect even more choppy price action than going forward. Okay, but overall, I still think that we are in a higher degree correction, and Fed obviously, and these hawks should slow down a bit before this market could stabilize and turn back to the uptrend, which maybe will show up in 2023.
Wow, great stuff, Greg.
Awesome.
We have a question there. If you could take a quick look at the dollar rand.
Just let me.
If you have it on. On your
I have something here. Let me check.
And while you are looking for it, I'm going to reply to Majid's question about how is the NFP result correlated with inflation. Yeah, it's about, as you say, figure higher inflation. Well, I mean, if you create more jobs, that means that you got more people earning money, and that is usually pushing up inflation a bit. And if you got lower jobs, of course, people have less money to spend. So that should be more deflationary as a rule of thumb. But it's just very simple, a simple explanation. It can, of course, be a bit more complicated, but if you look at it the really, really simple way, that is how things work. Go on, Greg.
Okay, here, I don't have a wave count here, okay, but let me try to look at. Okay, so looks like it's a very quite tricky here, but at least in the next few weeks, what you should see is actually that's a 5-wave drop right there, and this appears to be like a 3-wave movement. Okay, even here you have potentially 5 subwaves up. So if I label this for you just real quick, okay, and you are now, I believe, at the very important 78.6%. Okay, so that's probably the very key resistance levels. Even if it's a counter-trend movement, I think that this is definitely a key level from where we should see our response, either to the downside, or if we just will keep holding up there, then unfortunately we are going back to the high. So at this stage, I think that this is a do-die level. Watch out for the next response here. If we see, let's say that someone wants to take a short position here, I would wait on this drop and then sell pullbacks. If this drop occurs, obviously, then you could see potential short opportunities. So you want to see that market actually responds from that resistance levels. Okay, so you just have to wait whatever market decides to do here. Okay.
All right. Thanks very much, Greg. That was extremely thorough, insightful, and yeah, very, very, very nice. Well, I think we've said enough. We've done enough. Thank you very much, Gregor.
Thank you.
Stelios, I let you. Do you want to talk about
The weather?
talk about the weather, my friend?
No, just to remind everybody, we have the Trader Summit event coming through. We also have
You see?
the special pricing that we have ForexAnalytix for a few more days. It's going out on Monday. The price is going up at the end of Monday. So, and they're going up substantially. So take advantage now and you get locked in, you get grandfathered. And you don't have to worry about prices going up. So 3 days left basically, and take advantage. So that's it. I don't have anything else to say. Thanks all for being here. Thank you, Cayman. Thank you, Gregor.
Thank you.
Always great.
Yeah, and let me to wish everybody safe trading this afternoon. Don't forget, take care of your books. Don't go and dive into stuff that you may regret afterwards. But if it moves, you can take advantage of it. And as long as there's money flowing around in this world, there will be other opportunities coming on Monday. So safe trading, everybody, and a very nice weekend. And we talk to each other next week again. Happy NFP Day.
Bye-bye, everybody.
Bye-bye.